Hi again, and welcome back to the Olymp Trade channel, where we discuss all things trading. Olymp Trade is just more than a trading platform, and you are more than just a trader. We are all members of a community, and we have a lot to share. My name is Alex, and in this video, we'll dive into the top technical trading mistakes that most traders make and discuss some practical solutions and ways to avoid these pitfalls. But before we proceed, don't forget to like and subscribe. Technical and fundamental analysis are essential trading tools, but if you use them wrongly, it's easy to make costly mistakes. As the legendary trader and author Michael O'Neill once said, the whole secret to winning in the stock market is to lose the least amount possible when you are not right. One of the most common technical mistakes is over-reliance on indicators. Technical trading is undeniably a popular method, and many traders use it to analyze the market and make trading decisions. However, as with any trading strategy, there are some common mistakes that can lead to lost opportunities and profits. Overloading your chart with tons of indicators can lead to an increase in chances of false signals. Technical indicators such as the Relative Strength Index and the Moving Average Convergence and Divergence (MACD) can be valuable tools for analyzing the market and identifying potential trades. The RSI can be used to gauge overbought and oversold conditions, and if you combine it with MACD, you'll be able to validate potential momentum shift. Remember that signals for most indicators are derived from price and volume data. Chasing price movement is another common technical mistake we often make. It can be tempting to jump into a trade when you see an asset rapidly rising or falling in value, which often leads to wrong market entry. Instead, focus on quality trades that aligns with your overall trading plan. Practically, I can recommend starting with a longer time frame to identify the overall trend and then moving to shorter time frames for good entry and exit points. As the famous investor and author Peter Lynch once said, far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in the corrections themselves. Remember to stay aware of major news and market events that can impact the overall market sentiment. One of the key risk management tools is stop loss. Not using stop loss can be costly. This is because this risk management tool can help you avoid significant losses, especially if your trade moves against you, or when the value of an asset reaches a certain price. With stop loss, you are protected from further losses. When to scalp and when not to scalp. Scalping might be a viable strategy for you because it can be fun and profitable depending on the market conditions. But if you focus only on short-term charts, you may miss out on important trends and market sentiment. Remember, the market is constantly changing, and the failure to adapt may lead to losses. Scalping is a fast-paced activity, and to execute your trade with lightning speed, you will need plenty of liquidity. Don't scalp if you feel your focus is slipping. Mood swings, headaches, and other distractions can throw you off your game. If you experience a string of losses, take a break and give yourself some time to regroup. Don't attempt to take revenge on the market straight away. In summary, being a successful trader requires consistent effort. Successful trading is not a final destination, but rather a result of a series of decisions and activities over time. Remember to stay disciplined, informed, and focused on your goals. Olymp Trade offers plenty of analytical and educational support, trading signals, market insights and tips, guidelines on trading strategies, and tools. Don't forget to hit the like button and to subscribe. Leave us a comment below and let us know what topic you'd want us to cover next. See you soon.